Hey everyone, welcome to your daily update for Solana BTC. So our one day short has played out, our one day long has played out. We're now sitting potentially with this 4-day long based on the other timeline, which takes us up to about 135 on Sol. Also, we did find support on the hidden 84,640 level in BTC, which is kind of like a 3-day level that wasn't really very clear on TradingView. So it's looking like market structure is following the rules. It just seems to be following the rules across two different timelines, one of which is very easy to chart and the other one of which is not so easy to chart. So as for liquidity, it is starting to build up to the downside. And yeah, so people are starting to open positions in the shorter term. So they're getting a little bit more bullish, watching the price go up. We have got some resistance which will probably form today on one of the timelines. So one way or another, I think a lot of those newly open positions will probably become a target at some point. So if we look at the 7-day, 7-day starting to even out. And if we look at the 30-day, it's probably still a bit more biased to the upside. Yeah, still a bit more biased to the upside. So won't go too much into the targets of the liquidity itself, but once we get to the charts, the one thing is that they do basically line up. So, 98 to the upside, 148 to the upside. That's pretty much where we're creating some high time frame resistance today. And if we flip down to the 7-day, hitting that 135 would sort of be that 4-day target. So that's pretty much taking out all the 7-day. And same thing, we're getting some resistance. We may be forming around that 92, 93 area today as well. So yeah, it's looking like everything kind of lines up. Right, let's have a look at these charts. Okay, so looking at Sol BTC strength on the daily, it's had a really good push up off the break level. It never tapped the range trend, but when it moved, and so pretty much what happened is yesterday's close, we moved the trend. Today's candle bounced said trend, and at this stage it's pushed back up above the origin level. It's actually sitting up above the resistance trend, which is rather bullish at the moment. So we do have 2 hours to go. If we open the next candle here, then it is clear of the trend and has the ability to move up. Doesn't mean it will, right? So just like when you see back here, we can close over a trend and you can still end up with basically a fake out and then a dump to the downside. So it could happen, but you've got at least a 50-50 chance based on where it is now. Also, it's creating an engulfment, and you need an engulfment if you're going to try and break a trend. So, you got 50-50 chance that you might actually get another push in strength out of Sol if it closes up at this sort of level. If it is to go down below 14296, then it's not creating the engulfment, so it would still be roughly on the trend, maybe just over the top of the excuse me, just over the top of the trend at that level. And it'll be back inside the origin level, which is kind of the most important thing. So what I would expect to see if this does close here is possibly a pullback to the trend, the engulfment, or the origin, and then maybe a bounce up to test the origin above. So you might get an initial sort of bit of a pullback on Sol, but then actually a strength, that is, versus BTC. But then you should get a push up to that next level after that. I mean, if it goes any higher than that, then yep, that's pretty bullish. There is a trend up there, like a prior broken trend to be retested, up around that 14636 area. So yeah, maybe it will go up and hit that, but at this stage it's not looking disastrous. Looks like the trend is working. The target for the trend is typically a hold. So if we look through the various holds that are in here, the only one where the first one really is that 14674, where no candle has entered the body of it, although the wick has been tested pretty much by the candle we're in now. So this may qualify as the completion of the move from the trend, and hence why you might get a bit of a fake out when it goes to break the trend, because this trend pushing to the wick of that hold candle is technically enough. But we'll see. We'll see how that goes tomorrow. Okay, let's have a look at the safety assets. So good but not perfect. The fact we tapped into that 69.23% level, which is the third level of the daily range that it was creating, that's meant that for what 1, 2, 3, 4, 5 days now we've had weakness through the altcoins, but the rejection of it, that's good. Now the reason I say good not perfect is it's still above the origin breakout level, which is this level here at 68.42. So we want to see a close under 68.42 if you want to see more strength coming into alts. And even more bullish would be once again to get under that damn trend, which it just can't seem to break. But you can't break it if you're above it. You don't have the chance to break it if you're above it. So if we can get the candle down into that sort of 68.23% area, somewhere around there, then we will be under that trend. And then maybe we can actually have a 50-50 chance of breaking it versus a 0 chance of breaking it at this current stage. But the rejection is good. So yeah, it can easily find support on these 68.06 levels or any parts of the range, and then it can have another bounce. But at least at least at this stage, with 2 hours to go, we just don't want to see it close over that 69.03 or that 69.23 level, because then we potentially are breaking out of this range, and that means mega dump for altcoins. All right, let's have a look at the totals. This is quite a bullish candle. So this bounced off the range trend, the origin, has cut straight through a interior trend, cut through a prior broken trend, which has also been acting as resistance, and is now sitting pushed up against the next exterior. So yeah, even if this candle closes exactly like this, it's actually quite a positive looking candle. If it opens on the top side of the trend, which is going to be anywhere like where it is now, 2.66 trillion, then it could push up to try and test the next part of the range, which would be the backside of that broken trend, so about 2.71. The thing I probably said yesterday about the structure too is that all of these hold levels have been tested. This candle tested this hold level. This hold level is tested by this candle. There is no untested hold level in this part of the range up here. So it's as nuts as it sounds, because we've definitely got lower targets. We are going to hit at some point, but we have upper targets as well. And this is looking like the kind of structure that could make a move quite quickly if it so desires, because there's just not a lot of resistance there. So there will be, on close of this candle, a new break level here at 2.73. So break levels do typically reject. There is a break level just above that already, which is 2.77. But these are just break levels at this stage. They're not origin levels, and we don't actually really have we've got a tested origin level there at 2.85. We've got a tested origin level at 2.86. So these are all ones that have done rejections previously. And then we have an untested origin level at 2.89. So really the first level in here that hasn't had its first touch, bigger potential rejection, is that 2.89 level. So it could, we could see some kind of, we're calling them trolling events in the Discord at the moment. So we could see some kind of price troll where it gets everyone bullish, goes up there, does a first touch rejection at 2.89, and then the market dumps down again. Entirely possible. I mean, that is effectively what ranging is. Ranging is, it's just going to go in between origins until it breaks one of them, and when it breaks one of them, it breaks out of the range, and that's either going to be, in this case, a close to this upside, and then you're going to get more upside, or a close to the downside, in which case we're going to get more downside. So but as it currently stands, it's holding the bottom origin, and it looks like it's challenging the trend. So yeah, it's not that bearish for a daily close, really. Okay, now if we take BTC out of the equation and we just look at alts, not quite as bullish on the alts. We haven't actually hit the trend yet. It's not quite in a position where it can actually get over that trend and successfully break it with the next candle. So for this, altcoins really do need to have a little bit of a move up, right? Because that's that's potentially going to hit trend resistance on the next candle. Now it does have a hold level being generated. It hasn't lost the origins. It hasn't lost the range trend. So it's still got plenty of support there. It also sorry, I need to delete that because I should just stick with the automatic trend lines. But it also hasn't technically used the trend that shifted either to bounce. So it may be set up for another dump and pump, but more specifically targeted at altcoins. We'll see. If it does give a bit of a push before the end of the day and you start to see everything jumps up, a few percent, then this is going to end up in the similar sort of position to where the BTC totals are. So we'll see how that goes. And let's have a look at Sol. So what I can see here on Sol on the daily is what looks like a very, very bullish candle. Like it's bounced off the backside hold, which was the 1 day move that we took. So if you took it, then that so that was the 119 entry, or just below. Obviously, wait for a trend shift on a lower time frame, and then that's the target. The minimum target was that 125.6. Now it hasn't really rejected from that so far. We've got an hour and 57 minutes to go, and there is the 4-day move in play that takes it up to about 135. So it could just be that it is trying to maintain these levels, break these levels, so it can continue on with the higher time frame direction. Now, it is probably also important to stress that even if it goes to 135 and completes the move on the 4-day, which is pretty likely, there is still that hold level untested that is sitting there about 136. Also, 135 would basically be the middle of the range. And also, if it does it tomorrow and it does it from an opening position, say underneath this trend, so that means the story changes and gets a bit more bullish if we close the day over 131.5-ish. But if it stays below that trend and then pushes up and meets that 4-day target, hits the hold level, and does all of that in tomorrow's candle through some kind of pump, then it's probably once again, let's use the word trolling, bit of a trolling pump, because it's coming from basically an area of weakness, pushing up into resistance. Almost certainly will it actually pull back, right? So that's kind of something to be a little bit careful of. And like I say, it is that 50% sort of that entire range as well. So there's really two outcomes from all of this. Number one is that what you've seen in the last day or two is the sweep of the bottom of the range, and then the price is going to take off to the upside. It's pretty unlikely because that's not a huge sweep in the scheme of things. You really would have expected them to come lower because we have lower targets. But hey, let's just put it out there. Maybe that is what is happening. Maybe, and you could start to take a little bit of a belief in that if we start to close over these sort of 136 type levels in the coming days. But the other option, of course, is that we've just gone down, bounced off some support. We're going to travel back up and sweep some shorts to maybe the halfway point of the range, then dump over and go down to those lower targets, which we haven't quite hit yet. So it may just be they want to complete the 4-day move to the upside before actually dumping down to lower support. So one of those two scenarios is most likely going to happen. The other thing that we are introducing today, which we'll see in some of the later timeframes, is we're potentially going to introduce some resistance up around this 147 area. and that would be the ultimate troll to do what looks like a sweep of the bottom of the range, go all the way to the top, and then dump. And I shouldn't laugh, but it's just kind of like, you know, all the structure is, you can imagine how bullish people are going to get after you go and create a low like that, and then you come up here. I think technically the resistance is going to get created around 147.8-ish. So that's going to be like almost creating a slightly higher high. People might get really, really bullish, and then down it goes. So we'll see. But that is what we're looking at on the daily. Now I'm just going to bring up all these other ones. All right. So if we look at the other timeline, we've got a 2, 3, 6, 59, 118, 131, 177, 262, and a 354. I don't even know if 354 actually matters, but I've got it on there anyway. And that is all closing today, even though we actually only have a prime day 1 day close today on TradingView. So if we look at the 2 day, the candle is getting relatively close to engulfing. It's back up inside the origin level, so that was about that 125. So we want to make sure we stay over that 125. The engulfment is going to be roughly, it's really hard to get anything to snap to these, but the engulfment is roughly 127.7, 127.8. So if we're closing over 127.7, it actually means something. And I don't know if people have really noticed this before, but this is the kind of thing we've picked up. Sometimes you'll have a candle like this, which has a level of 129.071. And these are things where the next candle, which maybe this candle closes over the 127 level, this candle in theory needs to close over the 129 level, but what ends up happening is that this candle then goes off on this big bullish pump to the upside, simply because in the background it actually did close a level that allowed it to push higher. So I don't know if people have noticed that, or sometimes you get like two candles that engulf one and then it bounces off the backside level at a later stage, even though it doesn't look like a proper engulfment. So what's happening in the background here actually affects some of what happens in the front. So if we do get a close over that 127.7, 127.8 sort of level, then we may actually be creating the hold level we need to break the 2 day downtrend. So keeping a wee bit of an eye on that one. Then we have the 3 day. So 3 day probably needs to be up a little bit higher. Like, it's pretty close. So 127.7 or 127.8 would allow the next candle to open over top of the downtrend. So that's possible. And at this stage, as long as it stays above one of the there's an older break level, origin level, which is about 126.7. So it just needs to sort of stay above there. Okay, and this is the 4 day move in place. So it doesn't close today, but this is just a range move from or a fib move from 120.262 up to that 135. So this is quite likely what is driving the bullish momentum at the moment, because it's kind of the biggest, smallest time frame in play. I mean, there's all these other things which have targets of $50 and targets of over 200, but but they could take weeks, 6 months, whatever to play out. This type of stuff is relatively small and will probably get priority from a time frame perspective, but it is impossible to tell how long things take to play out. But generally speaking, the smaller stuff tends to be quicker. So for this, we really just want to be over the 125.919, because that puts us back up inside the 4 day origin, and then hopefully it will do a bounce and continue on to that 135.7, and then the world is a normal place if that happens. Okay, and we've got 6-day close today. 6-day close is back over the interior trend, which comes all the way from up here. So not a bad place to open a candle. However, this is where we start to get some potential resistance. If we don't manage in the next 2 hours, how long we've got to close, yeah, about that. If we don't manage in the next 2 hours to get over 132.185, then this will end up as a downwards close and it will create a hold level. So there could then be some resistance in there. It may create a rejection back to the backside of the trend, or even just the origin level. Effectively, we could double bottom what's gone on over the last few days, at least double bottom. I mean, it could decide to go further, but I don't know exactly where that would be at this stage. I mean, worst case scenario 98, but that's pretty bearish. Now, the other thing that can happen in this instance, because this would be a high risk short, a hold level like that, just with one candle following it. Yeah, the other thing that can happen is it could reverse the hold. So to do that, it would be going forward to complete the 4-day target. But if it doesn't pull back from the 4-day target and actually stays up above this 132.185 level, it can flip that. And if you flip a hold level into reverse, what then happens is you bounce off the hold level and you test a trend, which actually can create a very bullish move up to something like 170 in this instance. So it's yeah, if we are reversing, they might be doing it in style and in secret at the same time. Okay, what else we got? Today we have a 59-day move. And this is where we are potentially introducing that resistance around that 147 or above. So exactly what I just said about what could happen with the lower time frame. This high time frame hold, which gave this bounce back here all those months ago, it could actually act as resistance. Now, you don't know whether it will or won't, but the fact that we're closing the candle down below the hold means that if we come back up to that 147.897 area, we could then get a rejection off that. And that could continue back and challenge that origin level there again at 120.487, which is kind of bigger picture where this bounce is heading off. So, yep, that is... Yeah, so that kind of covers off all of that liquidity that you see on the CoinGlass charts there. Like if we go up and hit that resistance or potential resistance at 147.897, then we've cleared everything on that 30-day chart to the upside. And then, like we always say, it's basically how do we behave when we get to that level? Because that's the key thing. It's if you go into a level and then you just reverse and start dumping down, well, then it's game over. But if they get back up above that hold, and that hold has not flipped into resistance, then the price will keep pulling back towards the trend, and then that gives you sort of a target more around that 160 area to aim for. And the 118-day pretty much gives some confluence to what you just saw on the 59, and that's that we are just going to get, unless we close over, exactly the same number. So this is kind of how you get confluence on, what might become a reverse hold. The fact that we actually just have a hold level forming today at 147.897. So once we get back up inside that area, we're adding into that another low target of 109. Now 109 already exists as a target for other reasons. But there are things like trends, like what you see over here, that are getting in the way and stopping the price from actually getting down lower. But we are creating more resistance. So, this is potential to come back down. And now the 131, and we want to watch this for basically intent. So this is one of those scary levels, okay? And I might have explained this in in the video yesterday, but I've explained this in Discord. I've explained this many, many, many times. These really big levels, it's hard to know when they will play out. But what tends to happen is they play out. And it normally comes at a time when everyone's been super, bullish or bearish, depending on the direction, for a really long time. They think euphoria is there. They think it can never end. It's, up only or down only or whatever. So I guess it's either extreme fear or euphoria. And then something comes out, it'll be like, I was very curious yesterday, like what if the Bank of Japan came out with a 1%, move or whatever instead of a 0.75 that the market was expecting. It'd be the perfect excuse just to execute something like this. So we have a level in here to bring us down to 68. And this is not actually the biggest one. There's one that's even lower than this, I think, floating around. But how long? How many candles is it going to be? Because if we do get back up above 141.631 anywhere in the next 131 days, and we close a candle up there, then it could just flip to support and it could hang around up there for a while. So the first thing is you got to break a trend. Now we are on the wrong side of the trend now for this, so it's got a really good, but it's not broken because the body's on it. We've got a really good chance that this is going to happen now sooner rather than later because we're on the wrong side. But at the same time, you kind of need something to reject off, and quite often what ends up happening is you end up with like a double up. So we have this hold, and that really ended up just getting supported by the trend and getting pushed back up inside. It closed inside. We've come back down. We're below it again. Now, the number that is really important today, funnily enough, is 126.614. Now, if you look at the current price, where we're sitting at the moment, we're sitting at 126.879. So, if you're a nervous person, you should be right now, because if we create a secondary hold here on the wrong side of the trend, then we're saying that this is getting close. Now, the target of 77.244 would be the target of the smaller hold, but the older one would be just below that, and that means that 177 wouldn't necessarily be where it stops. It could just keep coming all the way down here to 68. So this is the very bearish side of things. Now, if we close above 126.614, it shows that their intention is not to add fuel to the fire. And maybe that means we are going to get a little bit more of a move up beforehand. It sort of just gives you a bit of insight as to what they might be thinking. Now, if we were to do a pump to the upside, you're going to run into the reverse side of that trend. It depends on how long it takes to get there, because obviously the trend becomes a higher level with time. If it went there in a split second after opening the new candle, then you're going to hit the trend at like 168. But if it took a month of going up, or 2 weeks of going up, or whatever, then you could end up with something higher up as a retest point before the move down. So yeah, definitely watching this one for today's close. Okay, let's see what else we got. So this is kind of nothing apart from, we just really want to see that it closes above the trend, which at the moment it will be. It's again cutting it quite close. Don't want to see it coming down any more than a couple of dollars before close at all, really. In fact, we just don't want to close under 126.6 for reasons you now know. And I have no idea whether stuff this big even matters, because there is, as you can see, not many candles on the chart. Maybe we're going to break a trend today. Maybe we're not. I don't know. I don't know if this actually even matters, but I guess we are about to find out. All right. Let's have a look at BTC. Right, so BTC on the 1 day completed its short, and I think we mapped that out showed everyone what that was like in yesterday's video, but basically it went all the way up to about a 15-minute level, I think, from memory, and then came down, hit the target, job done. And it actually ended up going lower than that because embedded in all of this, when you dig into it, there was actually a 4-hour level, which actually allowed it to come down a bit lower. And sitting down here at 84640, we had a kind of hidden 3-day origin level, which was showing up as a daily, but it was actually a bigger level than the daily. So that's allowed it to push straight back up through all of these daily resistances. And we've then run into that good old reverse level again, and here we are. Welcome to today's close. So the close itself isn't too bad because it's getting back up inside a range, as long as it closes over that sort of 87.6 type area. But it still has the challenge of getting over the trend. So it'll be a break of the interior trend as long as it closes yellow. The interior trend will shift ever so slightly unless we have a bit of a pump up, but it will move here. You'll end up with two trends in close proximity, and then you've really got to break through all that. Now, normally that would reject. If it does, then thankfully they have created this hold level down here by closing up today. So that's around that 86.2. So you might get a pump through the trends, a bit of a troll, a fake out. We do have a perfect target for that, which is up here at 91.97. So yeah, they might just push through all that, have some kind of bullish pump, get everybody excited. But just remember, you've come from the wrong side of the trends. Okay, and intentionally there is a hold level down below. So if they do a pump to the upside first, just expect it to get retraced, and have a dump. If it doesn't, great. But if it doesn't, it would be the minority of times, versus the majority of times. This kind of setup is designed to push through resistance, get everybody hopeful, hit the hold, come back down, end up under the trend, take another few days or whatever to break the trend, get everybody to capitulate out of their positions by having them all in drawdown because they would have all chased this trend break, which didn't happen. And in the meantime, what they've actually done is they've tested the hold, and the hold itself then is no longer likely to stop it a second time. And then once everybody has capitulated out of their positions and they get over the top of the trend, then they make the real move. So, like I'd say the behavior is actually not that bearish long term, but just don't get trapped by these kind of as I said, we're calling them troll moves. There's just troll move after troll move after troll move at the moment. You can tell by the wicks, just up, down, up, down. So it's yeah, don't get trapped. That's what I got to say. Right, let's have. By the way, if it actually closes over 89.288 the next hour and 35 minutes, game changer. Game changer, closing over that reverse level and over that trend. Next candle actually has a real chance of breaking at that point. Right, let's have a look at all these others. Okay, so the 2-day close is back up inside of its range, so up over the break. So we just want to stay over that 8764.2. So if you see them starting to sell it down in the next hour and a half and intentionally dragging the price down under that, then you know that already they are trying to have a bit more of a bearish close. But there is, regardless of what happens on the trading view close tomorrow, there is already a little 2-day hold level getting created down here at 86465-ish, about there. So that's something that that is something that they could use to support the price, because technically this is not a trend break today. Because the candle is on the trend, it's not the one that breaks it. But if they do any kind of pullback from a position of support, hit that hold level, and then bounce back up again, that would actually be a way to break that trend. So keep a bit of an eye on that one. This is the 3-day, which is also closing today. Now, that was that level we spoke about yesterday where I said I'm very interested to see what happens when it hits this. So it is not a visible level on TradingView. It is a visible level via other timelines. So this is getting really rabbit hole stuff here, but we've hit this. It's an origin level. Because it's bigger than all that one-day resistance that we've just spoken about, this candle's been able to push straight through all that resistance. We're now sitting at the trend, and the next candle may open on the other side of the trend. If that's the case, the hold level has already been tested here. The outcomes, because we're not really breaking the trend, we are potentially just going to open a new candle on the other side of it. So the outcomes could be to come back down and find some kind of support, whether it's a revisit, a double bottom, whether it's the reverse side of the trend, which wouldn't necessarily be as much of a dump. There is also the possibility of them using this again, which is basically a prior reverse level. So 8-7, so about 8-7-300 roughly. They could use that, and then the next candle could bounce. Now, obviously, it's got to stay up for 3 days. The clear target where that would try to go for is the break level, which is about 93,400 roughly. Sorry, I have to say roughly. And then the incomplete 3-day move, which has been restricted by the trend, is actually to 95,200. So that's kind of what I'm seeing here. I'm seeing that we've tested a hold level, we've bounced off an origin, we're going to open on the top side of the trend, we've got a move incomplete up to 95,200, and if we actually manage to close that and get over that break level and complete all this and hard close this trend, then the next target is actually much higher up, so 100k type targets again. So anyway, that is where we're at, and that is one of the closes today. So what else we got going on? So the 4-day is not closing today, but very positive that it opened anyway back inside its break level the other day. So, but that's not actually closing today. 6-day. Okay, so the 6-day will be creating an upwards array of the trend today. As long as it stays over this level here, which is 8-7-300 roughly, then it's also not creating like a reverse hold out of that level either, so that's good. Now it's not a yellow candle, so it is not hard closing this downtrend. There is a break level there, funnily enough, up around 94,500 roughly. Sorry, the reason I'm saying roughly, everyone, is that the candles don't actually snap properly here. So like if I move the cursor over it, I get different levels. I have to go somewhere else and trying to kind of move it around to the right spot. Okay, so that, yeah, so it may hit the break level reject. Maybe it comes back to the trend. So again, double bottomishy type stuff from the last few days is all that would really be. Wouldn't necessarily be catastrophic. Unfortunately, the one thing I don't like about the structure is that it's never typically good to drift to the right of a trend and then have an upwards candle, because what you end up doing is you end up like particularly if it's a steep trend, you end up well across from it, and then if you do have a trend retest, it's really low. Like, so if you imagine the next candle is a yellow candle and that is the one that officially breaks the trend, then the next day when that candle has closed and the next one opens, your retest point becomes all the way down here at like 76. And we know we have 76 as like a downside target. So you start to see various different ways that they can make that have confluence by being bullish. Like if they actually do a bullish close in the next 6 days, so what that would be like Christmas Day. So if on Christmas Day they've had a bullish close and they've engulfed this candle even, they're technically then inducing the requirement for a retest of the back of this trend. And trend retests are not as probabilistic or high probability as things like hold bounces, but they still happen a lot, and when you already have a target that you know of that's down in the mid 70s, it could be like, hey, Merry Christmas, happy surprise, let's dump. So you just, yeah, that's the kind of thing that could happen looking forward 1 to 2 weeks. Okay, what else we got going on? So the 59-day is creating some range trends, or a range trend today, which maybe I can do it backwards. There we go. Well, that doesn't really help. All right. I will find a better way than this. So I don't know where that's going to be. It's going to be roughly, but it's down facing. So, if the next candle was to challenge that trend, that gets you back down into that sort of 70s area as well. And it would have a hold level all the way up here at about 104 through to 107. So closing back inside the hold could also mean 92.8 becomes resistance. So you can sort of see some of the structure that they're starting to create in the high time frame. Could mean we could push to 92, dump down into the 70s, bounce the 70s, go back up to the hold at the 100 plus area. So that's entirely possible. The other way they could go is they could go up to the hundreds first, come down, ultimate troll, and that would that would be pretty nasty. But the bullish side of all of this is that they haven't hit the break level yet. So as far as, are we still technically in an uptrend on this time frame? Yes, we are, because we haven't hit the break level. So, yep, that's all we're seeing there. Okay, the 118. This is super fun. Probably going to get some resistance around 92.8. So this is kind of confluent with 92.8 resistance through to 93.69. There is trend support in there. Now the untested trend is kind of around 80. The one that it's sort of bouncing off now, which is an older trend that got recovered, if it was to hit that again, it's only about 85, so you might see a local move, pull back to 85, then into the 90s. What we don't know is we don't know what the refined levels are inside these types of candles. So, could the price travel all the way up into this higher area before rolling over and coming down? Absolutely. We don't know the answer to that yet. So I'm trying to work on a way to actually figure that out. But at this stage, it's even getting this is a load of fun. Okay, but once again, target 74s. So we've already got the target in the 74s. We're just getting more confidence that there is going to be a travel to the 74s at some stage. We just don't know whether they do a bit of a fake out rally to the upside first before they come down, or whether they dip from here. One way or another, to break a trend, you need a hold level. And for those of you who saw the video in the comments about the EEK trend, I called it a long time ago, when BTC was up around 120, we made a 3-month hold level, and it's the first time we'd ever made a 3-month hold level and a 3-month trend at the same time. So as soon as we had those two things, you have a structural move. And of course, what happened is the next time we went up and worked through that 8 trend, we dumped, and that was just more confluence of the top. But basically, what this is doing, same thing. We have trends down here, but what we didn't have until close today is the same time frame hold level. So now we have that. We have structure to have a move to the upside and the downside, or the downside and the upside. So we just don't know which one comes first. Crystal ball, not that good. Okay. And then we have this. And so I've been looking through a lot of this really big stuff, one by one, working out all the how the daily moves have been inside these candles, whether they've been ups and downs or whatever. This is not complete. It closes today, and it is not engulfing to the downside. So, more or less, what this means is that we either hit 98 at some point and it's a reversed hold and it becomes resistance, rejects down to that 76 area, more confluence with those 70s, or it has not become resistance and it is capable of continuing its move up to 111.8k, which I don't think anyone is expecting right now, but that is potentially something that is in play. And then we go bearish again because this will have resistance forming, and we've got a trend, and that would be about 92.7. Yep, 92.7. Yeah, but like I said, what we don't know is what are the refined levels up inside there. Because sitting up inside this wick somewhere, there could be a refined level that is 111k. And if that is the case, then this thing could bounce off that trend, travel all the way up there first, then come back down. So this is the problem with dealing with a lot of this high time frame stuff. You got to dig right into it to figure it out. As a target, this particular type of thing would only really be a double bottom at around that 81. So, okay, nothing happening over here. Although, that does mean 69 at some point. So this will be a... Actually, sorry, there is something happening here. Can we get on the top of that candle? We'll call it 69 point something. Low 69 point something. If that closes yellow today, then that would be a hard close of the $69,000 range on a really high time frame, which means at some point we'll come down and retest that break level. So, and I guess everyone kind of knows that's going to happen at some point, but it's interesting that it's hard closed over here. It hasn't gone down there yet, but it looks like it's trying to create an engulfment to go down. Okay, so maybe add 69 as a could come sooner rather than later move. And then when we get into this really big stuff, there's our 69,145 break level. Looks like we're gonna be opening and creating an uptrend kind of at the same time. So of course, it all comes down to exactly where do we open, and boy, do they like to cut it close. So that is probably going to open on the trend at this price point. If it can get up, I don't even know. Let's see. It probably has to be over probably just over 89 for it to be slightly on the top side of that trend, which is maybe why it really wants to stay under. Now, opening on the trend doesn't mean dump, but it doesn't give you a guarantee that you're just going to bounce off it either. But yeah, if we go up a little bit more in the next hour and a bit, then but keep the candle blue because that's obviously important as well. Closing the day over 92.7. It's funny how these numbers, they all kind of line up. If we close over 92.7, then the candle isn't actually a blue candle. We don't create the trend, so on and so forth. You actually really do want a trend here. You want something to support the price to actually give it a bounce and make it harder for it to immediately go down to 69, but that is what we have. Right, let's have a quick look at Tesla and MicroStrategy. Okay, so Tesla on the daily, it's still in between levels 3 and 4 of the range. It's closed down unless something changes in post, but it has closed down below the trend again. So it's not, hasn't managed to break out there yet. What else is there really to say? Not too much. The key thing is you don't want it to convert this top level, which is, to be exact, let's see, 488.54. So there's all sorts of things that go on up in here. You got your trend at the top, which it's pulled down underneath now for close. You've got a break level, which is 488.54 on the daily. Now, if all it takes is one day of a candle not touching that 488, and if that happens, it becomes an origin level. If it becomes an origin level, you're probably going to get a deeper rejection. So that's kind of what you're watching out for. But also an origin level is otherwise known as a breakout level. So you get a deeper rejection off them, but if they ever get a daily close over them, you also get a deeper breakout or a bigger breakout. So yeah, at this stage it's trying but failing to get out of the daily range. And if the next candle opens above the trend, it gives it a 50-50 as long as it closes above the trend to break that topside trend. But you can get fake outs where you open above a trend, you push through the break level ends up pushing it back down anyway in the next day. So it's still this is the very, very definition. If you are buying Tesla right now, this is the very definition of buying resistance. Like you could be at the top and you don't know. So that is the daily. Now the weekly's got a couple more days. Everything obviously about the weekly has come from the wrong place to begin with. So it's pushed up from the underside of the break levels. 2 days to go, sort of expecting it would pull back down under the break levels. A little bit more bullish if it stays above them, because then the next week could be a hard close candle. That'd be great. But it hasn't hit the second level of the range yet there at 502. So it hasn't tested that. And that is what we call the pivot. All right, so getting above and closing above the 2.618 means that it is going to try and develop a range to a higher level. Hitting the pivot and rejecting means it's not. The reason I've sort of looked at this initially and thought this looks a bit trappy is because even this candle that's open now came from the wrong side of the base, not above the base. And you may see a pullback in the next couple of days, which I guess, given that it's going into weekend trading, means that it just opens badly, I suppose, on Monday maybe. Who knows? The other thing I find a little bit weird about this is it got really close to but didn't retest the trend. So they might have done that for bullish reasons, like because retesting that trend would have brought in a rejection. So maybe they just didn't want to do that straight away. They might want to just keep it hovering around here so that it can use something below as support to cope with that rejection. Yeah, it's all pretty hard to crystal ball gaze what this is going to do on a weekly scale, but from a daily perspective, it's relatively clear. It is not getting out of that daily range at this stage. It needs to open, needs to hard close, needs to get above that 4 point. You really want to be above that level 4, but to start with, you need to be above the break level at 488.54. Yeah, need to hard close that, and then you can have a crack at all those range trends up above. I don't think it'll be a smooth ride through that. I think it will have some, maybe a big wick up and then a big wick down. Relatively solid volume through here too, which you can read that two ways. You can say that's really bullish and there must be good news and people are buying, etc. But just remember, for everyone that buys, there's someone selling. So for there to be really big volume and relatively flat price like this, it normally means someone is either loading or unloading. People don't typically load tops, so we'll see. Right, MicroStrategy. Let's look at it over here first. 164. Well, it was 150 something the other day, so that's a little bit better, right? Let's see. Well, it's still just above the whole candle on the 3-month. This is really like as low as it can be at the end of the year. If it ends up inside this whole candle at the end of the year, then and that becomes a reverse level, eek, you'll probably be buying $100 MicroStrategy or lower. Now, if it can stay above it to the end of the year, then it really should be bouncing back up here. So into that 200 area. And even if we just look at it as a minimum bounce, 203, but I don't think this candle, there's no guarantee this candle has the ability to do a minimum bounce just because of the fact that this yellow wick went into it in the first place. So it really needs to do a range bounce, which would be that level, 219. All of which turns to, what are we at now? 164.82. Yeah, if it finishes the year under 164.50, then they love to tease, eh? Just sit right on the levels. Okay, so the weekly, and that's not ideal. Like, you don't want it to close the weekly under that in range origin. That's so that's 166.01. So hopefully in post market it just goes up just above that. And the daily, yeah, the daily might close under the hold level, not in the hold level as well. So yeah, it's a little bearish. Okay. Hasn't lost the range. There's something positive. Hasn't lost the range. Okay, it's got a bit of work to do though. Like, this thing really needs to stop stuffing around and get out of this area. Otherwise it's going to be pretty filthy. Okay, that's us. Don't think there was much else. There is some interesting price action on ASTER, which might be worth a note. So ASTER's run into a reverse trend. So reverse hold, rejected, reverse trend, support on the weekly. And if this starts to have a bit of a pump over the weekend and actually recovers back up over that trend, it could actually end up going all the way back up to $1.14 before it runs into that hold level back there again, or up to $1.20 when it hits that reverse level again. And of course, if it doesn't, then it's just going to get trapped in this little downwards wedge here and probably not get much higher than where it is now. It may also create a hold level there at 9132, and if it closes over the, so if it say half case, it closes up over the downtrend, but still creates the hold level, then you might get or bounce off either of these two trends in the next weekly candle, and then a push up to that 9132. So there might just be a decent sort of percentage trade coming in there, a little bit of a mean reversion or whatever, for having such a big dip down. So just keeping a bit of an eye on that one as well. Might be able to make some extra pocket money. All good. That's us. We'll catch you again on the next one. Bye bye.